Okay, so what's going on, guys? The question is, why are you on this video? Why did you click on this video? The whole point is, why are my stocks, my options being affected? Everyone knows what's going on with Ukraine, and the whole situation with them trying to take over little bit by little bit, which they have been. So what I want to try to do is break it down. I want to discuss how they're trying to control Ukraine, what kind of stipulations they're trying to put on Ukraine. We're going to go over some of the fact sheets for the White House when they're trying to bring their own stipulations in, the Russian central bank, the rubles, the stock market itself, and then we'll end with checking out the Dow Jones, NASDAQ, and the S&P 500. So let's go ahead and get started. The first thing is, let's look at the map. Have you actually ever pulled up the map of Russia and Ukraine? Russia is massive compared to Ukraine, but from what I've been hearing through the grapevine, just word of mouth, I've heard Ukraine is really holding up for the borders for Ukraine themselves, and actually is doing a really good job, especially for the size that they have. But let's kind of backtrack a little bit. So with Russia and the control of Ukraine, look at the areas under Russian control, right? So you can see that they've clearly started to have this constraint over Ukraine, the borders all around the area. So President Putin has frequently accused Ukraine of being taken over by an extremist. So keep in mind, the president of Ukraine is Jewish, and Putin is trying to have all these claims of them being this military alliance that basically is trying to go back, and the history that was taking place in the 1940s all the way to 1945, right? So we all know what we're talking about there. Now, as you can see, it says Russia has long resisted Ukraine's move toward the European Union and the West Defense Military Alliance, NATO, which, guys, that's what the main thing is going to be about. It is about Ukraine wanting to join NATO. So, announcing Russia's invasion, he accused NATO of threatening the historic future as a nation. So, Russia then retaliated by seizing the southern region of Crimea and triggering a rebellion in the east, backing separatists who have fought Ukraine forces in a war that has claimed 14,000 lives. Now, late 2021, Russia began deploying big numbers of troops close to Ukraine's borders, which we just demonstrated in that picture of the map. So the question is, how far will Russia go? It is not clear that Russia is seeking to overthrow Ukraine's democratically elected government. It aims that the Ukraine must be free from oppression and cleansed, like we talked about, of what took place in 1940, 1945, which is just absurd, right? So keep that in mind. Now, this false narrative of a Ukraine seized back in 2014. Again, the whole stimulus of this is going to be Ukraine wanting to join NATO. So real quick, if you actually just go in Google and type in NATO, what pulls up? Okay, so the North Atlantic Treaty Organization, which is called the North Atlantic Alliance, an intergovernmental military alliance between 28 European countries and 2 North American countries. So clearly they don't want Ukraine to join that, right? And it's a big deal. He wants to take over. So look at Crimea, which is what we talked about back in 2014 with the 14,000 lives that was affected by it. You can see Crimea here and Ukraine here. So with that demonstration with the picture, there's the Russian-backed separatist held areas, and then Russian annexed Crimea in 2014. Okay, so how dangerous is this invasion for Europe? These are terrifying times for people of Ukraine and horrifying for the rest of the continent. Again, hundreds have died in already what Germany has dubbed the Putin War. So people are really shocked about this. So let's look at the fact sheets, right? Because we want to know, how is this affecting our stocks? So, joined by allies and partners, the United States imposes the devastating cost on Russia. So we move down. Now, again, this is on the whitehouse.gov if you ever want to check this out. But these are the stipulations. So Today, the United States, which this was on the 24th, along with allies, imposing the severe and immediate economic costs on Russia in response to Putin's war of choice against Ukraine, which this is what I don't understand. Leave a comment down below. They're doing this and it's affecting their dollar, right? It's literally affecting their dollar and they're losing tons of money. So what is the ultimate goal? I mean, do they think in the long run this is going to help them? Because so far, clearly, I cannot see what the bigger picture is other than the NATO. What economically are they trying to serve in this situation? Okay, so severing the connection to the U.S. financial system for Russia's largest financial institution, Sberbank, including 25 subsidiaries, by imposing correspondent and payable through account sanctions. Now, this action will restrict Sberbank's access to transactions made in the dollar. Okay, so that's clearly not good. Then you've got full blocking sanctions on Russia's second largest financial institution, VTB Bank, which also includes 20 subsidiaries. Now, this action will freeze any of VTB's assets touching the U.S. financial system and prohibits U.S. persons from dealing with them. So VTB holds nearly 1/5 of the overall Russian banking sector asset, which is heavily exposed to the U.S. and Western financial systems. Again, it's a disconnect. What are you trying to prove? What are you trying to accomplish by having your banks seized up? You're losing money and everything's just falling down. I mean, the whole world is watching this. So, full blocking sanctions on 3 other major Russian financial institutions. Okay, 34 subsidiaries, and this sanction freezes any of the institution assets touching the U.S. financial system. Again, same information. Then new debt and equity restrictions on 13 of the most critical major Russian enterprises and entities. Again, all these banks. Now, the entities, including companies critical to the Russian economy, with estimated assets of nearly 1.4 trillion. So, that's going to make a devastating hit literally to their bank account. So, additional full blocking sanction on Russian elites, which I thought this was pretty interesting, and their family members. So there's your list of those family members. Now, this action includes individuals who have enriched themselves at the expense of the Russian state and have elevated their family members into some of the highest positions of power in the country. It also includes financial figures who sit atop Russia's largest financial institutions and are responsible for providing the resources necessary to support Putin's invasion of Ukraine. So this action follows on yesterday's action targeting Russian elites and their family members and cuts them off from the U.S. financial system. Again, so now your buddies are getting affected by it, so clearly this is not a good idea. Costs on Belarus for supporting a further invasion of Ukraine by sanctioning 24 of those individual and entities. Then fast forward to sweeping and restrictions on Russia's military to strike a blow to Putin's military and strategic ambitions. Russia-wide restrictions to choke off Russia's important technological good critical to a diverse economy and put Putin's ability to project power. Last one, historical multilateral cooperation that serves as a force multiplier and restrictions more than 50 billion in key inputs to Russia, impacting far more than in Russia's production. Again, what is going on? What is the thought process? Is it literally just to threaten for something bigger? So then let's fast forward. Russia's central banks. Markets respond to sanctions. Afternoon of the summary. So financial markets respond in predictable fashion to wider Western sanctions against Russia. The ruble, right? So that's like the dollar compared to the United States. The ruble crashed to a new record low of 120 per a dollar in offshore trading and was down 18% to 98.21 per dollar in Moscow trading after earlier losses of close to 30%. So again, now literally their currency has dropped. So it makes no sense. Now the Central Bank of Russia more than doubled its key interest rate to 20% and announced a slew of measures to prop up the ruble and the Russian economy, including ordering domestic exporting companies to sell 80% of their foreign exchange revenues. Again, still not following. Now, here's the thing. This is what I wanted to bring up. We're talking about the market, your stocks, your options, right? Your mutual funds, your ETFs, your indexes. Okay, how is it affecting me? Okay, so what is going on with the market, and how is the Russia-Ukraine war affecting stocks? Now, I thought this was pretty interesting, and this was actually on time.com. So the overall market has recently been reactive to the inflation at a 40-year high, rising interest rate, the ongoing pandemic, and now the devastating situation in Ukraine. Now, I could see that taking place. I could see Russia knowing that this would affect our stock market in a major way, and not knowing that predictability of the market itself. Maybe he thought it was going to go down and he was going to make some money off of it. So stocks plummeted after Joe Biden announced the sanctions against Russia. Though the market opened lower on Thursday, it closed on an upswing. The stock market opened higher on Friday. So here we are today. Now, this is a remark from this individual, this financial advisor, as I am not one. So here is a statement from one. This situation is an example of how you can't be reactive to news in investing. If you woke up on Thursday and sold your investment because of the war, you would actually have lost to the market. It's human instinct to react, and we are seeing that play out in the stock market right now. Remember, the market has more than doubled since the beginning of the pandemic, when we saw the market drop over 30% in March of 2020, right? And then fast forward 2 years, it grew exponentially like no other when it came to individual stocks, especially SPAC stocks. Now, the SPAC stocks themselves have been, overall companies and the overall concept of the SPACs have dropped dramatically due to retail investors being the ones to buy into it and not long-term traders. But with the overall stock market from March 2020 to what it is today, things are finally starting to dial back and have a correction. So is the market going to crash? I'll tell you exactly whether it's going to crash, and the answer is I don't know. Probably not, at least historically speaking, but it's typical to see wars affect the market. For the last 6 U.S.-involved wars, the stock market rose in the 10 years following the breakout of war. The worst was during World War II, when the market only doubled. In the 10-year period following the initial breakout in 1939, and the best was during the Gulf War, where it was up almost 500% from 1990 through 2000. Think about that. In the last 6 U.S.-involved wars, the stock market rose in the 10 years following the breakout of war. So every time we've had a war, other than World War II, which the market only doubled. So that's very interesting. So keep that in mind. That's another bulletin that I would think that there's a possibility there. Again, that's from that financial advisor, just kind of explaining their strategy, what their thought is when it comes to the overall market with the indexes, your stocks, right? Look at March 2020 as an example, and then look at the previous history when it comes to the stocks. Okay, so today, look at the Dow Jones. Remember, the Dow Jones is made up of a prominent company of over 30 companies. They're all large cap or blue chip companies themselves, with roughly, you've got Apple, you've got Google, companies like that everybody knows that these companies aren't going anywhere, right? What most people consider safe stocks. Now, it was only down 0.49%, so 50% of 1%, so that's not really that bad. Then we fast forward to the NASDAQ, and so that's going to be made up of, the best 33,000 companies. And so when you're looking at this, 30,000 companies. When you're looking at this, today it was actually up 0.41%. So the Dow Jones down 0.5%. We're up 0.41%. And then you've got the S&P 500. So for those that have been doing the index, in one day you're down 0.24%. But in 1 year you can see the rise. And even though just on the 23rd it was at 4,225, you'd have to go all the way back to May 14, 2021 to roughly be around the same range. And so we're going to have that uptick. Again, guys, I really do appreciate you taking the time to listen to me. I will continue to update you on current events and uh, eventually dive into specific stocks, just leave a comment down below on what you think. And with that, see you later.